Hello, I'm Kent Kramer, Chief Investment Officer at Foster Group, and this is our regular collection of financial perspectives for the week ended September 20th. In case you missed it, there is an election coming up this November. A lot of investors are asking questions about which candidates or parties would be better for their portfolios. After a quick review of the past 2 weeks' news about economics and markets, we'll look for some clues as to how investors might think about what's going to happen in November. First, a look at the markets and the news. I'm going to start with virus news about COVID-19 because I think in terms of the driver of what's happening in the economy and markets, it's hard to separate anything from our sense of the progress being made or not being made in terms of addressing COVID-19. Dr. Fauci was in the news this week talking about how he really does think things will get back to some semblance of normal sometime in 2021. And you can see in this chart from the New York Times the progress on the development of vaccines, moving from all the vaccines that are being tested in different phases, all the way to some that are already in limited approval and testing. We don't have any who have crossed the finish line, at least in terms of the United States. Some other countries have introduced some, but we expect that more than one vaccine will cross that finish line. And with the investments being made in Operation Warp Speed, the hope is that those vaccines will be available, mass produced and available to Americans late maybe in 2020 or early sometime in 2021, which would be great news for everyone, and I think would have great economic impact as well. In terms of economic news this week, we continued to see unemployment numbers improve. First-time claims went down, continuing claims went down. That's the chart on the left. If you look at the chart on the right, it represents some news from the Fed. The Fed said that they will continue to keep interest rates historically low to try to improve the prospects for ongoing and kind of fundamental economic recovery. Those rates are very low historically, but they've said it's worth keeping them there just to make sure the economy has all the fuel it needs once that virus problem is solved to really get into full recovery. In terms of how markets worked the last couple of weeks, well, a bit of a reversal from what we saw in the first part of the year. For most of 2020 and actually going back to 2018, 2019, US large growth companies, especially US high-tech companies, have been kind of the leaders in terms of market returns. And if you look at the lower chart, where you see large cap growth at 12.3, that's the year-to-date outperformance of those growth companies over just the regular or broad US stock market. Since the beginning of September, the month-to-date chart, which is on the top, what you see is there's been quite a reversal. Those kinds of stocks, whether they're small company stocks or value companies, those stocks which had not been doing great at the first part of the year have had a particularly good September relative to things like large cap growth. Time will tell to see if this reversal continues. Most of the time, markets go through cycles where growth will outperform, then value will outperform, large companies will outperform, then small companies will outperform. It's very hard to predict when those cycles will change, but people are expecting that to change at some point because of the extreme outperformance of US large growth in the last couple of years. You know, with this election coming up in November, a lot of people are asking questions. These are some common questions that we've been hearing. Foster Group hosted a webinar 2 weeks ago just about elections. We'll give you a link to that webinar here at the end of this conversation. But the common questions are, which party would be better for markets and the economy? How would taxes change under a Biden administration or under a second-term Trump administration? Would there be any changes? And should I be doing something now based on expected election outcomes? I think that's a question that a lot of people are asking. One of the reasons they ask is because they think, well, which party would be better for stock market and the economy? We've looked at this chart in the past, and I won't go through it, but the idea with this chart is really the market's done remarkably well under all different kinds of political control. The bottom number there showing the identical 14.52 is one of my favorites because it just says, hey, when one party has had control of the presidency, the Senate, and the House, the market has done equally well. When we think about what's going to happen this fall, though, one of the questions is, well, if there is a change in administrations, if there's a change in the Senate, how might taxes change and how might that affect my portfolio? Vice President Biden has said, if you don't think I want to raise taxes, you haven't been paying attention. So clearly he and the Democratic Party think that a tax increase is necessary to fund programs that are kind of languishing and also to create some policy outcomes that they see as important for the country as a whole. Some of their recommendations in terms of tax changes include raising the top marginal rate from 39.6, to 39.6 from 37%. Probably the biggest one for investors is raising the long-term capital gains rate to 39.6% as well, with marginal rates similar to ordinary income taxes. Now, both of those two, the 39.6 marginal tax rate for income and the 39.6 capital gains rate, are focused on households with incomes over $1 million. So when the Democrats talk about raising taxes, they've been careful to say that they only want to do that on the highest income Americans, that top 1 or 2% of wage earners. Same thing is true with the proposal to kind of expand the amount of money being collected for Social Security taxes. They've offered that they would like to collect the 6.2% FICA payroll tax, not only on wages up to $138,000 as it is today, but they would like to reinstate or re-implement that 6.2% payroll tax on incomes above $400,000. They've also talked about modifying SALT deduction limitations. Those are state and local tax deductions that were reduced under the Trump administration, actually causing for some Americans in high tax states tax increases. The Democrats are saying they would like to increase those deductions again, maybe to where they were before the Trump administration lowered them, so that people in high tax states could deduct some of those local and state taxes from their federal income taxes. So in 2021, then the question becomes, well, what's going to have the most impact? Certainly the thing that has most people's attention right now is the election. What it will be the election results? Who will be the president? Will the Senate be in control of Democrats or Republicans? Will there be a delay in the result in terms of who won the election? Maybe more important than election results. So again, if we look at kind of historical trends, I would say I think the bigger impact is going to come from what happens with COVID-19. If at the end of the year we start to see significant progress in a vaccine or even release of a vaccine, so that in 2021 people feel safer going back to work, going back to school, engaging in economic activity, that will likely have a greater effect than anything that would happen in the first few months of the year as a new President Biden or a re-elected President Trump came into office and began to make policy proposals. The other thing is, what if something unexpected happens? People often talk about the October surprise when it comes to elections, but certainly as we've experienced this year with the COVID-19 virus, there's a lot of unexpected things. There are things that we cannot predict that happen that change kind of the direction of the economy and change the direction of how our investments go, at least in the short term. We spent a lot more time talking about the subject of the election in a webinar 2 weeks ago. I mentioned this earlier. Jason Brown and I hosted a webinar where we talked about a lot of things relative to proposals from Democrats and Republicans. We looked at the history of markets under different tax regimes, made some conversation about how your portfolio might be structured to weather whatever tax regime or whatever political party is in power coming up. There was a question and answer period at the end. If you're interested in watching that webinar, this is the place where you can find it on our website, and it's available there for you to watch anytime at your convenience, along with some questions and answers that we took afterwards. I like this quote from John F. Kennedy as we think about kind of the results of the upcoming election and our participation as voters. Let us not seek the Republican answer or the Democratic answer, but the right answer. Let us not seek to fix the blame for the past. Let us accept our own responsibility for the future. That's true of us as voters. That's true of us as people who are investing dollars and stewarding them. That's true of how we think about caring for future generations. Hope we all engage well this fall. Hope we can kind of keep our eyes a little bit off the news and onto things that maybe matter a little more long term. And we hope you'll join us in a couple weeks when we do this again. Thanks for tuning in.